expert on currencies from JPMorgan, is joining us on the phone line. Brijen, good morning to you. The announcement is expected from IMF to include China in the SDR basket today. But I guess it kicks in a little later, probably next year. What should investor worries be? That Asian currencies and Asian countries will have something to worry about yuan depreciation?
Good morning, Lata. Well, I think on the yuan inclusion in the IMF basket, if it does come across, rather if it does come through, the impact would be a lot more gradual than probably most investors envisage. One, SDR per se is, it's outside of the IMF and the central bank reserve facility. It's not very well traded. Secondly, in terms of the immediate impact, even in terms of flows, it may not be as material. Thirdly, China would want to demonstrate that the currency is relatively stable, even though moving with markets. And therefore, what we have seen them do is, rather than target absolute levels, what they have been looking at is looking at the differentials and the volatilities in the onshore yuan market and the CNH market. So really, China is looking more at a structural shift there. So immediately, don't think there will be as large a material impact on other Asians. The other proximate causes, the Fed, etc., are probably going to impact it a lot more over the coming 6 months to a year.
Okay, so there won't be any material impact immediately. By the way, a couple of stocks are spiking up. So let's just quickly take a look at the intraday charts. IFCI is one of them, up 5% now. But IDBI Bank is the other one. Big volumes traded for such an early hour of trade. And the stock is now up almost 9%. IDBI Bank is the one I'm talking about. It's already reached, I think, about
93 rupees now. Yeah. 93 and a half, and it's up 8%. So clearly, IDBI Bank is a standout performer today.
There's almost 99 lakh shares traded in this early hour of trade. There's a big volume uptick that you're seeing in IDBI Bank. Brijen, hi, morning. Coming back to the currency space, the talking point this morning is the way the dollar index has shot up to above 100 and the concomitant impact it would have on EM currencies. What's your view on that and the impact it would have on the rupee?
Yes, Sonia. So, on the DXY, our house view is that if the Fed goes as planned, so it hikes in the middle of December and shows a gradual path, maybe a hike a quarter into next year, we think there is another 3 to 4% of appreciation on the DXY that we could look at. That's really the base case scenario. Translating that into other currencies, outside of the majors in the EM space, of course, there will be the impact felt, and some of that we are also witnessing in dollar rupee, the way it's reacted over the past week, 10 days or so. And we think in the run-up to the Fed, we could see some more pressure, because really while we've depreciated a bit against the US dollar, I think we've not depreciated as much or appreciated a bit against the others, as the others have depreciated a lot more. So what we are seeing in rupee is also part of a catch-up move, what we have here.
So where does it go? You see the rupee at what level by the year end and by the financial year end?
So I think in the short term, maybe a 67.5 is possible. Mm-hmm. However, I would think once we have the Fed out of the way and the Fed talks about a gradual path, then there would be some more differentiation coming in to within the EM space. And really fundamentally, while global commodity prices remain depressed, and oil remains within the kind of ranges that we've seen, fundamentally the twin deficits of India remain under control. And given that and the higher carry or interest rates in India, we think India would yet remain relatively attractive in the EM space. And therefore, we don't think there'll be much follow-on depreciation. Okay. For the year end, maybe back down to somewhere around 66.5 is where we would think. And then maybe an annualized 3 to 5% depreciation trend continuing post that.
All right. Well, finally, Brijen, what are you expecting tomorrow from the Reserve Bank? Anything at all that would worry the bonds or the rupee?
I think not. Really, on both counts, one, the RBI has kind of tempered market expectations in terms of looking at where CPI is. And given where CPI is, we think the RBI remains on hold. What it will do is caution around the recent mini spike up on pulse prices and therefore flowing through the rest of the CPI basket. However, it would really put a lot more emphasis on the Fed, and therefore we think from Indian markets, both rates and FX perspective, we don't think the RBI policy will do much, because RBI will remain on hold, waiting for impact of Fed and going forward the budget, because in light of the 7th Pay Commission, that also becomes important.
All right, Brijen, we'll leave it at that. Thanks for joining us. So that's the word coming in on the rupee and the expectations from the RBI policy.